So my name is Vlad Lounegov. I'm the founder and CEO of Mbanq. Mbanq is a banking as a service provider. We have a strong focus on the United States. I actually grew up here in England, so I can provide my own perspective, both from the United Kingdom perspective, but also from the United States perspective. And thank you, Temenos, for having me here. And it's always such a pleasure to be in a company of such forward thinkers.
Thanks, Vlad. I think you started to hit on it there before you then reverted introducing yourself, which is great. But I think really, let's continue with that, right? So really, on the emergence of BaaS in the US, what is that trend in the United States, and what is the kind of business problem that's really getting solved by it, in your own words?
Yeah. So United States market is actually fundamentally different to other jurisdictions. Why so? The regulation is key. Regulation is unique. If you look at the United States market, for example, you have to be a bank or a credit union, right? There's no way around it. So if you're a FinTech, you need to have banking as a service value proposition delivered with the sponsor bank. So what actually happens in the United States market? If you look at the value chain is much broader. The banking as a service value chain in the United States, it's much broader. It starts with the regulator or multiple regulators on the one side, followed by bank, licensed institution, and then followed by a technology provider or technology partner who works very closely with the service provider and delivering this value proposition to the FinTech. Now, the FinTech really is the consumer of banking as a service value proposition. They're able to capture it all together, capture the value of the entire value chain, and deliver it to the end users. So the key really is that the whole value in the entire value chain is being created by the FinTech.
Great, that looks really interesting. But so coming back to Mbanq though, Vlad, how is Mbanq part of the solution really, and what is your unique value prop?
Thank you for this question. So what does it take to be successful with the banking as a service value proposition? So we at Mbanq, we've been doing this for quite some time now, and one thing that we found is that you have to take the perspective of the FinTech. Why is this important? It's important because it's a FinTech really that creates value for everybody, right? They're the ones that are able to extract value from the entire value chain. However, from the FinTech perspective, there are 4 rules that apply. Rule number 1, the Mbanq needs to provide access to a licensed sponsor or a partner bank. So we have to come with a partner bank to be able to deliver this value proposition. Now, good news is that successful FinTechs oftentimes seek multiple licensed sponsors for their value proposition. So there's a lot of opportunity there. There's a lot of opportunity in the United States market. Second rule is that you have to have card issuing capabilities. That means that you need to have relationship with Visa, MasterCard. You need to be able to have connections to local POS networks, for example. You need to be able to find the licensed sponsor that is also Durbin exempt. Durbin exemption allows partner banks to share this juicy interchange that exists in the United States market. And that is also fundamentally different from the rest of the world. Now, rule number 3, compliance is key. You have to stay compliant at any point in time. Actually, compliance process is very convoluted. It's not really transparent in the United States market. And because there are so many regulators, it's not even clear who regulates who. So last but not least, rule number 4, the technology is key. Now, why is technology so critical in the United States market? The technology is critical because consumer expectations have moved on. They've moved on. Now, they've moved on, however, the incumbent technology vendors have not innovated fast enough to meet the consumer demand. Consumers want buy now, pay later. They want crypto. They want to access their financial products and services 24/7 through their mobile app. You'd be surprised. United States market is quite behind on those items. So what is also important is that you need to be able to work very closely with the technology vendor and provide services on top of that. And this is where I would say most important shift that one person needs to take is really to find a way to put this all together. Now, any change can be different. And changing a core provider, for example, is like an open heart surgery. Nobody really wants to do it. So alternative scenarios would include, for example, rolling out a parallel core or a sidecar core, for example. A sidecar core can deliver banking as a service value proposition without really changing the status quo that already exists inside the bank.
Well, that's really interesting. I'm sure there's plenty of partner banks in the room as well that might be interested to work with you. Coming to my last question, Vlad. So how are you using Temenos and that related technology you talk about to get this proposition out to market?
Sure. So Temenos offers deployment flexibility, continuous operations, and open connectivity. You need to have that to underpin successful banking as a service value proposition. Mbanq brings to the table access to best-of-breed innovators. We also have very sophisticated compliance as a service value proposition, and actually our portfolio of as a service programs, they complement very much the technology and together delivers this joint value proposition. And here I would like to talk about what I call the network effect, if we have a minute. So the network effect means that oftentimes those fintechs, they come with business models that are otherwise not accessible to banks. And there is a huge variety of those business models. I'll give you examples. So some of Mbanq's clients, for example, they are Latin American financial institutions wanting to enter the United States market. Some of them provide services to ethnic communities, let's say Latin American Spanish-speaking community in the United States. There's also indigenous community in the United States that appears to be grossly underbanked. And then, of course, there's business banking, right? So small business banks, small business banking, and smaller enterprises are broadly underbanked and not really serviced by financial services institutions. So if you look at the breadth of those use cases, you will realize that it actually is the fintech that drives the success of banking as a service.
Thanks, Vlad. I kind of really liked your note on the network effect. I think that kind of the ecosystem play and the building network effect, we're really seeing that really play out in the market.